Absolutely flat right now. So let's get you some more opinion coming through. Let's cut across to Shereen, who is joined by NK Singh and the former CEA, KV Subramanian. Shereen, over to you.
Well, guys, it really has taken Nirmala Sitharaman to show the country what an interim budget looks like, at least in terms of the duration of this speech, 57 minutes, and we're done. No one was expecting it. Joining me here, of course, are the two budget editors, veteran of many budgets, NK Singh, the chairperson of the 15th Finance Commission. Also with us, of course, KV Subramanian, former chief economic advisor and ED at the IMF. Mr. Singh, straight to you. Fiscal consolidation. Everyone was talking about 5.5, 5.4, 5.1. That's the number that Nirmala Sitharaman has delivered.
Quite extraordinary, isn't it, Shereen? Because considering that I was also the chairman of the Fiscal Responsibility Management Act, from the fiscal perspective, 0.7% expected consolidation, considering what GDP, 1 percentage point of GDP looks like, in absolute terms is a fairly daunting target. It's a clear signal on the government's continued commitment to a path of macroeconomic stability, fiscal consolidation, and I have no doubt that the debt numbers would also show this kind of a fiscal resolve and look in a southward direction, which is very important by way of signals to investors and to rating agencies on India's continued adherence, even in an election year, to a continued belief in the path of fiscal consolidation.
And I think that context is important because, Mr. Subramanian, as we were speaking in the morning, the expectation was that there could be some big ideas, some big schemes like PM Kisan. In fact, they haven't even touched PM Kisan, which was the big expectation that they would hike the number from 6,000. That hasn't happened. I think there is a tinge of disappointment on the capex number. You would agree, because you were hoping for a higher number as well. At 11 lakh crore rupees, you know, that a little bit of a disappointment there?
So let me start by giving my initial big picture assessment. I have 3 words for the budget: JNV, judicious, non-populist, visionary.
JNV, judicious, non-populist and visionary. That's a nice acronym there.
And the reason I actually say that is, in an election year, resisting the populist pressures. And I remember mentioning earlier as well, for instance, I never viewed the PM Kisan scheme as a populist scheme because of the economic benefits that it brought. So it is consistent with the theme of this government, which is actually focused on judicial macroeconomic management. As I said, it's non-populist. But there is one big idea which I'll come to just in a minute. Visionary, because it has actually, done, there are 2 aspects to it. One, what has already worked very well, they're continuing on that, rather than trying to change too much. And at the same time also laying out a vision. And now here's where I want to talk about the big idea that I have seen, which is the 1 lakh crore for innovation and research and development. As a researcher, that gladdens my heart enormously, because, I think if India has to be a developed economy, and you would recall, Shereen, we had written a chapter on innovation in 2020. For the first time, India broke into the top 50 nations on innovation. I think that momentum needs to be carried forward. 1 lakh crore, 50-year loans, which is, almost interest-free, would I think be a big spur to R&D and innovation. On CapEx, I actually do think that there is space. I do think that as long as the money goes into capex and delivers growth, thereby making sure that the R minus G differential is negative, I am not someone who actually believes in the 3%, 3% fiscal deficit, 66%. That's from the Maastricht Treaty, which is a political document. So for me, I think given the demand for infrastructure, I would want to see a greater allocation for capital expenditure.
Mr. Singh, state capex loans for FY25 to continue at 1.3 lakh crore rupees as well. There has been no change there. Your big takeaway as far as the announcements that have come in from the finance.
So let me put it this way. Subra used a different way of describing. I want to go back to something that she herself said, which is TCB, trust, confidence, and the blessings. Things which have worked well, do not tinker with them unduly.
So why fix it if it ain't broke?
Why fix it if it isn't broken? It reinforces trust of government's continued path of what it said on fiscal and overall macroeconomic management. It exudes confidence, as I said at the beginning, because notwithstanding other kinds of populist pressures, it had stuck to delivering something which is responsible, credible, and embedded in India's long-term growth story. You talked about the states, Shereen. I think that's a very big change. If you look at the document which was put out by the Economic Division, it looks as though the states have begun to utilize this in a very purposive way. The utilization last year has been close to about 86, 90%, over 90%, which means that the states themselves have switched over their expenditure pattern into believing on the long-term multiplier growth. So from that point of view, continuing to trust the states in providing this additional thing will add to the long-term growth story, a decisive move towards Viksit Bharat.
A decisive move indeed. So just again, for the benefit of our viewers who might just be joining in, FY25 PM-GKY outlay at 2.05 lakh crores, and for the MNRE-GA, the outlay for FY24 BE was 60,000 crores, and I think it is unchanged at that. And the PM Kisan, the FY25 MNRGA allocation is now increased to 86,000 crore rupees versus the BE of 60,000 crores. And as far as PM Kisan is concerned, the allocation remains unchanged at 60,000 crores. So broadly, what's the expectation now, given what has been delivered, on what we should expect from the full budget?
So I think the emphasis on capex, and just to add to what Dr. Singh was saying, that given the utilization of the 50-year interest-free loans, you would recall 1.3 lakh crore had been provided for, and 98,000 crores of that has been utilized, which has resulted in a 47% increase in capex by states. I think that's again, it builds back to the big theme I said. What has worked well, they've actually doubled down on it. So the 75,000 crore that was announced by the Honorable FM, I don't know what, again, that is interest-free loans for states. What category is it in? Is it a subset of the 1.3 lakh crore? I'm actually not clear. I hope, that'll get clarified in the press conference. And also the loans for tourism development to states. Again, that is part of the same theme, which is what has worked well. When states are being given incentives to do capex, they're responding. And I think that is the, so overall the emphasis on capex, growth multipliers, just a visionary, sort of move, I think, in the budget.
Mr. Singh, I'll just come back to you in 1 second. We've got